If you are a beginner in trading and have yet to make $100,000 heck, even made a single cent from trading, then I am going to show you how to solve all your time frame problems in trading today in this video. So let's go. You know technical analysis. You have seen hundreds or even thousands of trading patterns online. But when you actually place a trade, the pattern never ever seems to play in your favor and you end up losing the trade. This happens because you don't understand this important framework called multiple time frame analysis. So I'm going to be breaking down 3 main points. What is multiple time frame analysis? How you can implement this into any trading strategy? How can you make this profitable for your trading plan? So what is multi-time frame analysis about? Imagine a tsunami. Before the big wave is formed, there will be many small waves that come together and combine its strength to form a monster of a wave that will destroy everything in its path. Similarly, in trading, you must understand that in every single movement in the market, there is going to be a smaller movement on the lower time frame. For those of you that can't visualize, I am going to draw it out using lines to illustrate what I mean. Let's say you're in a downtrend on a 4-hour chart. So what does this mean? This means that the 15-minute is showing the fractal movements of the 4-hour chart, forming a higher time frame downtrend. This is exactly why you need to use multiple time frame analysis in your trading plan. Now, how can you implement this into any trading strategy? It is pretty straightforward, regardless of whichever strategy that you use. Smart money concept, ICT, support and resistance trading, indicator trading, or whatever else trading method that you use. All you have to do is find a time frame that you're looking to enter on. It can be a 5-minute chart, can be a 1-minute chart, can be a 50-minute chart. Ideally, you want to look at the lower time frame. Now, take this value and multiply it by 16. So, see for example, you have a 50-minute chart. Now I multiply that by 16 and what do I get? I get the 4-hour chart. Once price taps into an area of interest on the 4-hour, what I'll do is I will go down to the 50-minute time frame and look for confirmation of the buyers on the higher time frame. Now this will be shown in an example over here. On the 4-hour time frame, we can see a bearish move to the downside and price has left quite a bit of inefficiencies in the market, and what I did here was that I marked out my area of interest on the 4-hour, which is this 4-hour unmitigated order block. Now all I have to do is wait for price to come and retest the area, and once price retests the area, I'm going to the 15-minute time frame, and once I go down to the 15-minute time frame, I look for another break of structure on the 15-minute time frame to look for shorts. So this is my personal strategy that I use to trade over the past 6 years, smart money concepts. So your trading plan might differ from mine and your trading style might differ from mine. You might be using support or resistance, doesn't really matter. It still applies. You still can go to the higher time frame and look for confirmations on the lower time frame once your higher time frame is giving you a directional bias. Now, if you're a swing trader or someone who only trades on the higher time frame, you don't need to multiply your 1-hour, 4-hour, or even your daily chart by 16, because that would mean that it would take at least half a year for you to get an entry. Now, what you can do is go 1 to 2 levels of your time frame higher. So let me give you an example. Say you're on a 4-hour chart trading support and resistances, and now you're looking for a trade on the 4-hour. So what you should do is go to the daily time frame to have a clearer picture of where the market direction is going on the daily time frame before looking to take an entry on the 4-hour chart. Now, the real question is this: how is this going to make you profitable? Trading using multiple time frame analysis will help to give you confirmation of your buyers when you are trading. It's like the cherry on top. You want to be able to have full confidence in executing your trades, and having a higher time frame direction to guide your buyers will help you in your trading. This is because it will give you that boost in confidence and confluence to be able to pull the trigger once your trading setup has come to you. To those of you that haven't practiced it yet, I urge you to backtest your strategy on TradingView and add multiple time frame analysis to it. And you will be grateful for watching this particular video and implementing multiple time frame analysis into your strategy. If you like a live demonstration of how we do multiple time frame analysis daily on our streams, do drop us a follow on YouTube, turn on the notification button to get notified when we go live on stream every single day on London and New York trading our 250k personally funded live account. For those of you that stuck to the end of the video, I have a surprise for you. On top of having free daily signals and free education, we are going to be releasing a 14-day Forex intensive only for people that are inside our Telegram channel. So click on the link down below to join our Telegram for free. If not, there's nothing else from me, and I'll see you in the next one.